Ladies and gentlemen, good day and welcome to the Q2 FY22 earnings conference call of Asian and Company, hosted by Prabhudas Lilladher Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Ms. Shweta Shekhawat from Prabhudas Lilladher Private Limited. Thank you and over to you, ma'am.
Hi. On behalf of Prabhudas Lilladher, I welcome you all to the second quarter FY22 earnings call of Estran Limited. We have with us the management represented by Mr. Saurabh Mittal, the Group CFO, and Mr. Atul Soni, the Head Investor Relations, Strategy and M&A. I would now like to hand over the call to the management for opening remarks, after which we can open up the floor for Q&A. Thank you and over to you, sir.
Thank you, Shweta. Good afternoon, ladies and gentlemen. I'm Saurabh Mittal, the Group CFO for Estran. I would like to welcome you all to our second quarter result conference call for FY 2022. Thank you all for taking this time out and joining us here today. I trust each one of you and your loved ones are safe in these times. On the business front, Q2 saw good traction in higher education and test preparation segment, with examinations being held for various admission and job vacancies. We are also seeing school openings across all states in the country for the senior classes. We expect primary classes to open during Q3 across the country as well. The pace of school openings is heartening and we expect higher volumes for the coming season. We will be going into the upcoming sales season on the back of strong tailwinds of school reopenings, especially with students in rural areas going back to school after a gap of almost 2 years. And we also expect an increased price realization across our product portfolio. On the higher education front, engineering and medical colleges are seeing admissions for the first year happening during Q3. We saw second year students starting their new sessions during Q2 itself. This is different from the usual cycle of higher education where colleges used to start new sessions in July, August versus October, November. Please see slides number 5 and 6 for details around the opening of educational institutes across the country. On the digital front, we have launched Estran Academy, a new YouTube channel focused on engineering and test preparation segment to help students bridge the gap on difficult concepts. The present day needs of the learner have been taken into account for this. We are looking to increase the number of videos in this channel multifold in coming months to ensure we reach out student community through this medium as well. We have also launched a new and revamped e-commerce website for Estran during the quarter. This should be helpful in increasing direct customer sales and engagement for us. Additionally, we will be launching Learn6 Bangla during the current quarter in West Bengal and Tripura. We expect to onboard at least 100K users by March 22. Madhuban Educate 360, our K-12 learning management system, has now gotten implemented in 25 schools post a successful pilot. We expect more schools to be using this product as the year goes by. In terms of the numbers for second quarter, our consolidated operating revenues came at 518 million. Our gross margins stood at 56%, and our net loss came in at 412 million. On a year-on-year basis, we increased sales by 42%, reduced EBITDA losses by 40%, and reduced PAT losses by 13% from the same quarter last year. On first half-year basis, H1 FY22 is not comparable with H1 FY21 since H1 FY21 had a sales overflow from Q4 FY20, which was impacted by the national lockdown in March 20. In our opinion, H1 FY22 should be compared with H1 FY20, where we have had equivalent sales but lower EBITDA losses by 58% and lower PAT losses by 26%. This shows the impact of our Estran 3.0 implementation and focus on cash flow during the last 24 months. Thank you. Over to you. Sorry. I'm happy to share that we have continued our good work on the working capital and debt front. In terms of working capital, receivable days stood at 182 days versus 192 days in the same quarter last year. Our net working capital days also decreased by 16 days on year-on-year basis to 250 days versus 266 days in Q2 FY21. Do keep in mind that this improvement is despite having lockdowns across the country during COVID wave 2. In terms of debt, we ended the quarter with gross debt of 1952 million and net debt of 1356 million. We have moved to a fundamentally lower debt profile for the company. Our gross debt has reduced by 319 million on year-on-year basis, and net debt has reduced by a large 653 million on a year-on-year basis. I would like to reiterate that we are looking to reach net debt zero levels by Q4 FY23 on the back of increased cash flow generation and higher sales. On the inventory front, we are moving to a structurally lower inventory level in the company. We ended this quarter with an inventory of 1476 million versus 1785 million during the same quarter last year. This is a reduction of 17% on year-on-year basis. This improvement in inventory is driven by various steps that we took in controlling print runs and optimizing book titles. We are targeting 800 million to 1000 million inventory by FY22 year end. In terms of cash flows, we generated operating cash flows of 122 million versus 130 million at the same time last year. I wish to highlight that there is a strong reduction in trade receivables in H1 of 1,114 million versus 822 million last year. This is in spite of COVID challenges that we faced in the past 18 months. This also represents better quality of sales achieved in FY21. As we move through FY22, I would like to call out a few highlights for this year. Firstly, we will be taking a price hike across our product portfolio to the tune of 5 to 10%. We are also mapping our books as per the NEP 2020 and are also preparing for the NCF, which may be announced in the coming months. Secondly, with increased number of vaccinations and lower COVID cases being currently reported, we expect schools and colleges to fully reopen by year end, and this will lead to higher volumes during Jan to March 22. Thus, if COVID situation holds up, then we can get a dual benefit of higher product prices and normal sales season in FY22. Thirdly, on the debt front, we aim to become net debt free by fourth quarter of FY23 and further optimize working capital going ahead. Fourthly, the biggest growth driver for our print business would come from the introduction of the new syllabus post the announcement of NCF. This should lead to strong revenue and profitability growth for 2-3 years. As of now, our base case is that NCF should impact financials from FY23 onwards. Finally, the focus on cost and working capital has ensured that we have stronger liquidity than a lot of our peers, and we are poised to take advantage of the disruption that COVID has brought. With this, I would like to open the call for your questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question from the line of Deepen Shankar from Trustline PMS. Please go ahead.
Good afternoon, everyone, and congratulations for the entire team of SN for continuous improvement in balance sheet. So firstly, wanted to understand now with schools opening across the country, and also you told in the presentation that we are looking for a normal sales season in FY22. So are we seeing our revenue run rate coming back to 600 to 700 crore sales with strong Q4 numbers expected this year?
We are still targeting about between 500 and 550 because again we are looking at quality sales for the current year also. We would not be pushing too hard because there is still a lot of stress in the system. We do not want to supply to certain customers because they've not liquidated past outstanding. So we will be a bit conservative as far as that is concerned, but we'll continue to work with our premium channel partners and ensure that we keep our working capital and cash flow efficiency going. So yeah, we're targeting about between 500 and 550, but not, if things really open up well enough and everything goes back to normal, then of course we can see higher. But
so Deepan, as of now, the data points that we have in our hands, it is, one that the COVID cases are low as of now. Okay, we don't know what the situation will be in Feb and March. We have taken a price hike that will definitely be there in the system. We are going to work with our premium channel partners. We are not going to, dilute our stand on that. So, I mean, there are a couple of moving parts here. We don't want to give you a higher number just for the sake of a higher number and then there is an issue. Okay, so we would like to be conservative at this point of time. Probably when we interact next in Feb, at that time we would have had some idea about how the season is panning out, or how the initial feelers are for the season. So I think that probably will be a better time to give this kind of a prediction, whether it's 500 or 600 or 700. Right now, I don't think we will be doing a right thing by calling out that kind of a number.
Definitely, that is helpful. And secondly, during last few quarters, we have been discussing that a lot of rural schools under stress and they are not able to conduct online classes and therefore our revenue is also getting impacted. So are we seeing the trend reversing now? They are able to open schools, they are conducting classes or online classes, they are able to receive fees. So any updates on that?
Yeah, so see, Deepan, rural schools or probably schools which are charging below 10,000 rupees or 12,000 rupees were never doing any online classes. Okay, so that segment doesn't do online classes. Yes, over there when the schools actually open, which we are currently seeing, that they are actually opening up, that means that students will be starting to come into the physical schools now. So once that happens, then obviously it's all good news for us. So that segment, if let's say if there is a school which is charging 1,000 rupees a month, they do not do online classes. And because of government restrictions, those schools are not allowed to be open. But now, as you can see in our investor presentation also, that barring primary classes, class 6 onward, majority of the state governments have allowed physical classes to open. So we definitely expect traction to happen in that segment.
Okay. And also, what are the challenges we are facing in terms of fundraising for our digital initiatives? We have been hearing for quite some time, but we are not able to crack through any fundraising in that side. So any key challenges we are facing in that side?
Yes, I'll take this one. See, what has happened is our structure was not ready last year, and the structure has just got ready in July this year, and this has just been the first quarter for us, right?
Okay.
And now we will just start the process now, probably in December, and let's see. Let's see what we can come up with. Because currently with our own cash flow situation, we're not facing that kind of challenge. Currently, we are able to fund it internally. So with the kind of growth that we are getting right now, we wouldn't want to dilute right now. Maybe 6 months, 7 months down the line when things are a bit better. Because this is the worst. This is probably the time that we might have to take a discount on the valuation. So let us get some more traction on this, and once LearnFlix has more traction with B2B in Feb and March, once schools open, then I think we'll be better poised to pick it up then. So no challenges on cash flows, hence so we're taking it slow at this point of time.
And even we're also launching LearnFlix Bangla by this month end. So what we think is that let's say by March of next year, if schools are fully opened across the country, then we will see strong numbers from both, Bangla LearnFlix as well as the normal LearnFlix. So I think once we have that kind of a tailwind behind us, the numbers will be much better for us to get a higher valuation for that business.
Okay. So as you are saying, so these paying subscribers also will increase post March. You are saying, right, for LearnFlix?
Yeah, definitely.
That's the target.
Okay, because that has been flat for last 2-3 quarters.
Yeah, even if you look at it, whatever paying subscribers we basically got. Before just after launch we got that many paying subscribers, right? So bulk of them came during that initial days only.
Okay. So with schools opening up and schools start subscribing for that, that paying subscriber base also will improve substantially.
Yes, absolutely.
Okay, got it. Thanks a lot and all the best.
Thank you. A reminder to all participants, you may enter star one to ask a question. The next question from the line of Nitin Garmawat from Aurum Capital. Please go ahead.
Yeah, thank you for the opportunity. I hope I'm audible.
Yes, you are.
Okay, thank you. Instead of question, let me just first share some of the observations that I have, and then I'll ask the question regarding this funding part for our digital initiatives. What I gather from the market or from the people those with whom you were interacting. So independently, when I was talking to a few of those VC companies, the feedback that I got, I don't know if they shared that with you or they intend to share that with you, that frankly, and it's a very private feedback that I got, that they feel that S-Chand is completely confused as far as the strategy is concerned. What they feel is you are attempting both retail as well as the B2B side, which is not workable. They feel that it has to be B2B, while the presentations that you share has the B2C as well, the component as well. And my personal experience, we bought S-Chand subscription for my daughter from the retail category. I see the kind of efforts your team has done was phenomenal. 1,800 rupees. I am sure that you made a loss in that, despite having very good content. It was very, very good content, no doubt about it. We did not, renewed the subscription. Next year, our subscription was with a company which is there in the school of my daughter. Okay, Mindspark, which is from Ahmedabad, and it is not great content compared to S-Chand. But we have gone to someone who is already present in the school. So that is one part of it. The second part is from the S-Chand investor like me, who has come into the company for an overall S-Chand business, and I have felt that you will go for digital initiative funding from the other sources and not from your internal sources. As you are now saying that you will be, funding from your internal accruals for the digital initiatives. So VC are scared because you are putting in money for the retail side, and they feel that you are not going to compete with the world of Byju's. And for the investors like us who are from for S-Chand business, they feel that you may end up diverting money for the digital initiatives. So both the sides, there is a lose-lose, a loss-loss kind of scenario. So you will have to take a call on that. Maybe you are better in a better position to take that call. Just wanted to highlight that.
Yeah, so Nitin, so I think we've been very, very clear on our strategy in terms of what we want to do. I think there is absolutely no confusion from our side and our communication. B2B is our strategy for going to schools for LearnFlix, and that is something that we are doing from day one. We do not want to spend much. However, we had specified that in case there is a large fundraise, then we would crack the B2C market. But till the time no fundraise happens, we will not be investing either internal money or any other money onto the B2C promotions. So that strategy is very clear. Without external funding, B2C is not going to be done.
So that is what I am saying, that the VC people are saying that it would be better to have only B2B rather than going for B2C. So when you tell them B2C, they step back. They are not interested. That is what I got as a feedback from them.
Let's see, both have to work together, because what is the point of having an S-Chand brand name and not pushing our product as a B2C, right? We have a good product, we have good content in there. It's only about promotion. Now, promotion requires a push.
Sir, ultimately we want funds. If our strategy is not working out for raising those funds, it may not work. So what I would say that instead of stressing and harping upon on B2C while going for the funds, I would say that let's concentrate on B2B, and then whenever you feel a reason to have B2C, you introduce that as well. It's your call. I don't want to infringe on that, but just the feedback that I got, I wanted to share that with you.
So yeah, that conversation we've had with the investors, because the numbers that we can project on a B2B basis and a B2C basis, of course, are completely different.
I understand.
B2B requires a sales team which has its own limitations, that you can go up to only one guy can go up to a maximum 80, 100 schools promotion in a year. So that's the kind of market that you can maximum get. So you go to 100 schools, you probably end up getting 10 adoptions, and that kind of funnel will not take the revenue that high. But B2C with a push will definitely open up much more. And having the Eschan brand name, that advantage is always going to be there. But yes, having said that, we are continuing to relook at our promotion process also, and we'll have to rediscover the way we want to promote it. Currently, it's more B2B, and we are also doing it along with Milestone in the schools that Milestone is going K to 8. LearnFlix is also going there. So we're trying to do a bundle deal also. So a lot of things we are doing. It's not that the work is not happening, but again, since it's a seasonal kind of business, the numbers will not throw up in Q3 or Q2. So whatever will come in Q4.
I'll also like to add here. See, from whatever feedback you've got and what you have shared with us, I would just like to point out that from our perspective, I would say, a huge percentage, like a 90% plus kind of our focus is on B2B only. If we have a product, if we have a brand, and I am not saying that we are it's not the other way around. The moment you say that we are focusing on B2C, I would assume you would think that we are focusing, let's say 50-50 on B2B and B2C, or maybe a higher percentage to B2C. But that is not the case for us. For us, all of our focus, when I say all, I mean like a huge majority, with probably a 80-90% kind of a focus from a management bandwidth side, from our financial side, is on B2B only. So actually what you are saying, we are already doing. But just that if I have a brand tomorrow, I cannot say that we are not going to take any retail subscription, like you said, like you took a retail subscription, right? You would have taken a retail subscription for, reasons known to you, but I think it's not as if we would have spent 100 crores on an advertisement blitzkrieg for launching or for, promoting LearnFlix that way. So we are very much going B2B way only. Whatever feedback you have got, that is exactly what we are doing. What I fail to understand is, why do you think that we have, I think where the difference between what you are saying and what we are saying is that probably in your impression, we are doing a lot more focus on B2C, which is not the case for us. We are, if I have to give a number, I would say we are 90% more focused on B2B, because that is where our immediate funnel is.
No, wonderful, and I appreciate your feedback on this. There seems to be a complete, communication gap and perception which is built. So it can only be overcome if you are more clear about your communication rather than harping upon B2C, which is not your focus area, as you mentioned, wherein only 10%.
We have never focused. No, let me just put it this way. In all of our investor communication across the last 15 odd months, we have never said that we are going to focus on B2C.
You never said, but you still include that. When it is not a focus, why you include that? Why you talk about it?
Nitin, we've had no
because that is the perception which is formed based on that. Nitin. What they are saying, when I talk to them, what they are saying, that they will not be able to compete with the world of Byju's if they are having B2C, and the company is not clear about what they want to achieve. While you are saying that you are clear, and I am sure you are clear about it, the perception which is formed is just opposite. And that's where we are having a struggle.
So Nitin, we are sitting in November. The last conversation that we've had on fundraising was probably around April, right? We've not had any conversations with any investors post-April, because we understand.
I'm talking about that only. I'm talking about period before April only. And
what happened 6-7 months ago, it's completely different. We are focusing on B2B, and B2C has never been a focus, except that we are trying to promote LearnFlix through our books also, through other various platforms where we are already there, which does not incur any cost for us, right? We are trying to do tie-ups with certain people who further distribute through online channels and all that. So we are doing things on a revenue share basis, as in where it will work in the B2C segment without any cost to us. So that's one part of it. And our strategy is very clear. The document that probably the investors have is almost more than a year old, so I can't say anything about that because we've had very many conversations after April. So we will relook at our document as and when we hit market. Your feedback is taken. The other probably feedback we did get was that with Eschan owning such a large percentage of it, and there being no young founders into the company, that is one thing that they were also raising as a concern, and that is something that we're not sure how to address, because having invested all the money to dilute all of it just for the heck of it was not something that we were comfortable with. Hence, and of course that would also not help the investors of Eschan. So that is one thing we took a step back, and we said we will not dilute to the existing the team running it more than 10 to 20%. We will not do that. So that some people wanted 50% dilution. We said we will take a step back. We will not take funding if we are asked to dilute beyond a certain point of time.
Perfect. Got it.
Thank you. Ladies and gentlemen, you may enter star one to ask a question. The next question from the line of Devang Patel from Nafa Capital. Please go ahead.
Hi, sir. First, we wanted to understand the difference between Educate 360 and Milestone, and why Educate 360 is outside of the entity that we've created.
So, see, while both of them are on the same platform, which is the Igniter platform, so the base platform remains the same in terms of technology. The difference between Milestone and Educate 360 is Milestone is curriculum with lesson plans which are fixed. So when you go to a school, the school will have to adopt, if they want to adopt Milestone, it is a complete solution for the school where the complete handholding from training to lesson plans to content, everything comes in a bundle for them, and they have no other option for the school to take any other books or content except for this. And this is for the K to 8 segment, right? So this is a complete solution for the school who wants to get its education part outsourced to some third entity to ensure that learning outcomes are improved. So that is where Milestone is more about improving outcomes, and it is targeted towards your affordable private schools where the quality of teachers is not that great, and their management probably has other businesses. They have less focus on their school, so they want to increase the learning outcome for students, ensure that there is standardization in terms of what is taught across various sections in a class. So Milestone does completely that. Tells you what to teach, when to teach, how to teach. So that's Milestone. Now Educate 360 is basically an LMS where the school has an option of taking content from you or not taking content from you. So it's basically a platform where the school can take ebooks from you. It enables assessment. It enables ebooks to be on and it enables online classes also. So that platform is, and this can go to any kind of school, maybe a category school or a B or a C school. Anybody who wants to conduct online classes and put any kind of content, of course, from the group companies, will take Educate 360. And it's not separated. Educate 360 is a part of Vikas Publishing House, and it's basically being promoted by the team Madhuban, which is a subsidiary of Eschan. So did I get that?
Would it be part of the monetization whenever a fundraise that you do in future, because it's in a different legal entity?
Not yet. Because see, Milestone is something that has already gone to a certain level of 300 odd schools. LearnFlix also has got enough traction of 25,000 students. Educate 360 still it's in its initial stages. Once it crosses a certain level, maybe 100,000 users, then of course we can look at pushing it down there. But currently it's not, because we like to incubate it till the time it's large enough to monetize.
So when you say it's been promoted by the team at Vikas, are you saying a different team has developed this platform and compared to Milestone, although they are very similar?
So the technical team is the same.
The backend technology is the same, and this technology is a subsidiary called Editor Technologies, which became a subsidiary last year. And we had invested in that company in 2014. So the base technology for Educate 360, LearnFlix, and Milestone remain the same. It's on the same platform of Editor, and but just the front end and the usage is different.
Okay. And from what you said earlier, LearnFlix also will be a very seasonal business, and we'll have more subscriptions at the start of the academic year?
Definitely, because we are going to do B2B. B2C, of course, can happen any time around the year, but if you're going to do B2B, B2B will have to be parallel with the academics, the academic year, which starts in April. So whatever subscription we'll get, probably we'll get in March, April, May, June, July, up to July when we have admission. So some places the session starts in June and July. So it will largely happen around that period.
Okay. One of the slides you've given the medium-term target of reaching 5 million users. Would that bulk of it come from B2C?
No, we're trying to do more of it on B2B basis, because each school, one single school can get you 500 adoptions at a single point of time, or a large school can get you even 5,000. So that is where we are focusing on, because we focus on bulk selling. Because this is not a retail. To sell retail, again, the cost of acquisition is very high, right? So we are preferring to promote it through our group companies, through the SCHAN team, through the Milestone team. So the multiple teams already promoting LearnFlix across schools.
Okay. Sir, lastly on the NCF, it seems that the curriculum will be in place before the academic year begins for starting April, July 23. What is the risk of this slipping by one more year and things are not in place before that?
The risk is very real, because again, this is dependent upon how fast the government moves. Something beyond our control, but we have ears to the ground. We are monitoring how the progress is going, and accordingly we are working around it. But having said that, all the books that have come out this year already are being made compliant with the recommendations of the new education policy in terms of the various facets of the NEP have already been mapped to the books, and each of these books are being enabled as per NEP. So that differentiation is already starting from this year. So hopefully we will already get some traction, and as in when the NCF comes out, then the books will undergo the kind of change that is required. But we are already preparing for that, because a lot of it is already there in the NEP.
So actually our turnaround time will be a lot shorter than probably what it would have been, let's say, 2 years ago or 1 year ago. So because we are already starting to change our content, so that it aligns with the NEP, which is already out, when the final NCF comes, then we would be able to turn back the contents of the books to totally align to the new curriculum in a much shorter time fashion.
So alternately, what would be the backstop date by when you would need clarity on the NCF, so that you are ready for the next academic year?
So if you are talking for April 23 academic session, then it will be great if the NCF is launched by, let's say, October, September of next year.
Okay. And does it seem to be on track for that as of now?
So this is a government thing, right? We don't have a tracker for it. So that time is also still almost 10-12 months forward. Very difficult to give you an answer on that.
We understand that. We understand from our various interactions with stakeholders that work has already started, but we don't know the extent of work that is started and when the final approvals will come in. But I mean, it should happen by next year, best case scenario. Or again, as it is going to be implemented over 2-3 years, not going to be a 1 year thing. So that impact will have to be taken in 2-3 years.
Right, sir. That's all from my side. Thank you so much.
Thank you. Ladies and gentlemen, you may press star one to ask a question. A reminder to all participants, you may enter star one to ask a question. The next question is from the line of Shweta Shekhawat from Prabhudas Lilladher. Please go ahead.
Hi, sir. Thank you for the opportunity. So I would like to understand where do we see the debt levels for our company from 2 years from now?
We've already specified that by the end of March 23, we should be net debt free. So that's our target. We should be minimum, maximum, I mean, say around between 20 to 30 crores at max at that point of time. So that's what we're looking at right now.
Okay, sir. Thank you.
Thank you. A reminder to all participants, you may enter star one to ask a question.
अरे बुझना जो
As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you so much for joining us, and we hope to continue to do our work on the working capital side and improving the quality of business. We are also poised to do a couple of more things on the digital side, which we will be announcing soon enough. And we're seeing traction in a couple of new areas, which we would probably get back to the shareholders as soon as possible. Thank you so much.
Thank you. On behalf of Prabhudas Lilladher Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.